Hello everybody, welcome back. This is going to be a very interesting portfolio update for the month of August. The month of August was an absolute roller coaster of a month when it comes to my buys, my sells, dividends, portfolio value especially. We bottomed out at $27,000 and now our portfolio is sitting at $30,000. Over the course of this summer, my net worth has grown to the point where I've made more of what I would have been making if I were working a part-time job. Obviously, I'm still working as a landscaper, but if I were to pick up another job on top of YouTube and on top of landscaping, I made more basically from my account and grew my net worth that way more than I would have actually getting a part-time job, which is pretty nice. Well, this is cool and all. It's still not my intention to use the money anytime soon when it comes to my portfolio, and I'm going to let this thing compound. I make a lot of sacrifices in my life where I don't really have to use money every month to, have reoccurring expenses. I don't go out a whole ton. I don't party at all. And this is actually going to be a very interesting portfolio update because this is the last ever portfolio update before I go to college. And I'll be providing an update just currently where I'm at going to that because I will be starting in 2 days. With all that out of the way though, as per usual, I'll be sharing my buys, sells, dividends received, my portfolio's performance compared to the S&P 500, and being transparent, something a lot of finance channels can't do. Alright, on to the video.
Hello, I like money.
So to start off the portfolio update on a high note, currently my portfolio is sitting at an all-time high in value and we've hit a new milestone this month. We're currently sitting past the $30,000 mark for the first time ever in the portfolio. Now, I made a deposit the other day and I didn't fully anticipate that the market would gain as much as it did, and we're currently sitting above 30K right now, which is absolutely awesome to see. And it's actually pretty cool waking up every day, not doing anything, and just seeing your net worth in your portfolio grow like $200. It's absolutely a beautiful feeling. And it gives you a short glimpse of what can be done by investing a large amount of money as well. This is only $30,000. Imagine what I could do with like 100, 200, etc. But what's even better than waking up to your portfolio going up $200 in a day is your portfolio going down $800 in a day, which is what happened early on in this month. Honestly, I get more excited whenever the market is down because I know that I can just recklessly spend all my cash. Currently, my portfolio is sitting at $3,420 in capital, which is basically just 11% of the portfolio, and I'm very happy with where that's standing right now. I've been deploying this capital, but I've been doing it intelligently, and I'm making sure that I have cash supplied. Worst comes to worst, as we saw on Black Monday earlier this month, I want to spend some money on stocks. Currently, since May of last year, my portfolio is up 17.86%. That's basically when my Ameritrade transferred to Schwab. I'm very happy where the portfolio is at right now though. But with all this green in the market, I would be lying if I didn't say that I haven't took the opportunity to get out of some companies and consolidate my portfolio at gains and some losses, which I'll talk about in the buys and sells segment. Obviously right now the S&P 500 is kind of on fire, and currently since basically my portfolio was started on Schwab, the S&P 500 is up 36.48% since then. My custodial account is only up 19.91%. Hey, I'm not complaining. I'll take a 19.91% gain any day. While I am underperforming the S&P 500 right now, though, I'm not going to be discouraged because I'm still having a 16.41% annualized return, and I'm very happy with that. And over the long term, that technically is outperforming the S&P 500. Right now, though, it isn't, thanks to Nvidia, of course. I will take a 16.41% annualized rate of return any day. But obviously, as I've matured as an investor and realities kind of hit me a bit, I've realized that outperforming the S&P 500 is a difficult task to do. And I won't always be that interested in investing. I'm going to keep it 100. I don't want to be constantly researching these companies. I have school, life gets in the way. I'm definitely going to be concentrating a big portion of my portfolio and net worth into ETFs, which you saw a lot of in the buys this month. Don't get me wrong though, I'm still going to be looking for interesting opportunities in individual stocks and businesses to be investing in. Do not get that twisted. I'm just going to be consolidating a lot, which I did this month. Currently my portfolio is 73% US large cap stocks, 14% small cap stocks in the US, and $3.4 thousand in my portfolio, 11% is in cash. The only thing that sucks in my portfolio for now at least is kind of the dividends. Now, as you guys know, I have been consolidating a lot, and unfortunately, a lot of the best dividend payers in the portfolio aren't the best companies, and I've really started to separate a company's dividend from the actual business I'm investing in and not factoring it into my investment thesis. As a result, my dividend income will be going down for a bit here. I've been selling out a lot of high dividend payers as I've kind of realized that I can be doing better in my portfolio and focusing more on total return over the long term. I've been going heavier into higher conviction positions that don't pay the largest dividends, but over a long-term time horizon, hopefully, the dividend growth, snowball effect, and total return will outperform those businesses that were investing in the first place. Essentially, I'm getting more money at the end of the day, but I'm just getting it in a different way now through dividends. It was still a decent month, though, for dividends regardless. To start the month off, I got my last ever dividend from Costco of 71 cents. Rest in peace. We're going to talk about that. I got $2.65 from Apple, which I reinvested. My last dividend from Abby of $10.95, that one's going to hit a lot. Realty Income paid $3.47, another company I've been trimming out of. I got $1.13 in interest, I don't want to brag. And lastly, I got an $18.09 dividend from Starbucks, which I am absolutely fine with taking. Oh, ho, ho, I love Starbucks. Overall, though, a solid month for dividends. It's definitely going to go down in November, the next cycle, when these companies pay. A lot of these businesses I've sold out of since then, and that dividend gap is going to be big. And this is my dividend income over time. It's going to be a lot more inconsistent. And hopefully, once I kind of settle down on my core positions, I'm absolutely going to just have this thing skyrocket. Alright, this is the buys and sells for the entire month. Now, you should do what the top right corner says and subscribe to my live show, The Cashflow Kings Live, obviously. But this was a less active month in terms of buys and sells than July. July was absolutely crazy. For the most of this month, the market was going up, and I like to still invest when the market is going up. Don't get me wrong. I'm never going to try to time the market, just less aggressively. And I want to always make sure, as we saw on that day earlier in the month on Black Monday, you're going to want to have some capital on hand in case shit goes sideways, because it can do that very, very fast, I've learned. And coincidentally, every fall it seems that I've been investing, the market crashes, so I'm getting ready. To start the month off before Starbucks went to the moon, I picked up one more share at $74.22. I bought one share of SHG, which you're going to see a continuous trend of this month, at $97.09. I recently made a video about SHG, why I love it so much. Essentially, I want to make it a core holding in the portfolio. I built it up this month so far that currently SHD and SHG are the same weighting in the portfolio. Both are about 7%. I want to have a 15% allocation to SHG and 10% to SHD, but I'm going to take what the market gives me. And honestly, if SHD continues falling, I would more likely than not go 20 to 25% of the portfolio in SHG. I love it so much. It's very hands-off, and it's very effective in growing your wealth. It's much safer also than choosing individual stock. SHG is going to be that holding that compounds and really grows the portfolio's total return, while SHD is going to be a smaller holding, so that portfolio kind of performance that's going to be sacrificed when you invest in SHD is lessened. Now, SHD, I've said consistently here on the channel, I understand I'm 18 years old. I understand that. You know, I probably shouldn't be investing in SHD. I plan to use the money within the next 10 years from SHD. I full-heartedly believe that I'm going to be using that money. I'm going to use it to go to Las Vegas and use it on Las Vegas things. But I'm going to make the SHG weighting a lot bigger than SHD. I put $75 into Amazon at $183 and started up an Amazon position. We talk a lot about Amazon on the live show, but essentially with Amazon, I really didn't understand how big and effective it is and how people really depend on it. Like, the cloud business in AWS is absolutely insane. There's tons of pricing power in there, and I really do believe that Amazon is poised for a free cash flow explosion in the next few years. So I'm investing now. Obviously, I think I also am starting to understand that Amazon is going to be a profitable business. The CapEx is definitely a short-term thing, and as a long-term investor, I think Amazon is poised to outperform the market from here. So I have been adding and building to that position. It currently makes up $1,100 in the portfolio, about 4%. And I'm going to continue building it up below 180, 170, and just get a good price on it. Then I sold 5 shares of Realty Income at a 10% loss. This was that day on Black Monday where everything was going down but REITs, it seemed, and I just continued to kind of trim off. 10% loss, I'll take the bullet there. I think I can do better with the positions that I'm putting it into. I continued to sell out of Realty Income. This is that day on Black Monday. I bought 1 share of SHG at $93. I put $50 in Amazon at $161 and $100 into Disney at $87.36. Unfortunately, on Black Monday, I did not buy as aggressively as I could have possibly. I thought we were going to go down more. I wasn't going to load the deck on everything that one day. I don't completely regret that, to be honest. Then I sold my very small Costco stake, which I made a video on, at a 72% gain. I didn't even own a complete share. It was about 1.5% of the portfolio. I see continuously. I just think it's straight up overvalued. I didn't own enough in the portfolio where it was like a core holding, and it just made sense to hold on and continue letting it compound. It wasn't even enough. Even if the company were to go up like another 20, 30% from here, I'd realistically only be making about like $50. I think I'd rather just sell that now. What's to say that it's not going to depreciate back to its fair value and its accurate cash flows? There's nothing from stopping me from buying back into Costco Costco if it goes down again. I understand it trades at a premium. Does not deserve to trade at a 55 price to earnings, though. I just think I could be doing a lot better than Costco, and I'm putting it into better opportunities, in my opinion, especially SHG, which is where I put that money into pretty much. So, with that money from Costco, we got $534 into that to spend with. I put it into Disney at $85.61. I think Disney is one of the most appealing positions in the portfolio right now, even in this bull market. I'm really liking it. I think the streaming free cash flow is going to explode in the next few years, and I really do think it's one of those companies that is pretty obviously a buy right now, especially under $100. Obviously, I think there's going to be some people that are always going to doubt the company because they went woke or whatever, but I think they're past that. They've shown that the box office, they're dominating once again. The old Disney is back, and that's what I'm betting on right now. I put more money into SHG at $102. Then I sold another small position, Texas Roadhouse, at a 52% gain. This was literally 1% of the portfolio once again. It just didn't make sense for me to continue holding these various different holdings and stocks at crazy small positions. I'd rather have that money in a bunch of higher conviction positions and core holdings of the portfolio to completely compound and take full advantage of. So, of course, I put that money from Texas Roadhouse into SHG Amazon at $177. I'm happy where I put that money. Next, I sold 2 shares of Altria at a 21% gain. Altria is getting near the price where I say that I would exit out of the position. It's had insane performance as of recently. Cigarette rates are obviously declining, but I think right now is a good time to start trimming and taking some profits on Altria. It's still a small holding in the portfolio, but I'm happy where it's grown so far, and I'm happy to take some gains at these prices and reallocate to higher conviction positions. What higher conviction position in my portfolio is there than Visa? So that's where I put majority of that money into Visa, $85 into that at $269. It has since gone up about $7 since then, so I'm very happy. And lastly, I bought 1 share of SHG at $100.50. What I've been doing with SHG is throughout the week, if it really doesn't go down to a price that I love, I'll just buy some on that Friday and just dollar cost average into it. I'm fine with that. While I've definitely been trading in and out of companies a lot recently, I think I'm making my portfolio a lot more simple and hands-off through ETFs and just core holdings that I can just let them produce their free cash flows throughout the years and not have to worry about it quarter to quarter. I hope you guys appreciate this update. I still have a few more holdings that I'm definitely considering selling out of, so make sure you subscribe and turn on post notifications. I will be making videos about them there, where I put the money into, and so much more. Thank you all for watching. Smash like and subscribe. Do Dividend Stocks, Drugs, and have a good one.